Tesla, Nike, Amazon, Home Depot, Starbucks, Disney, Chipotle, Marriott, Etsy, GameStop, Bed Bath & Beyond, Best Buy, Hilton, Airbnb, and so many more. What do all these companies have in common? Yes, they are great companies, but they also are all a part of the
Consumer discretionary
in the consumer discretionary sector.
What's up, everyone? It's your boy Noble Living back with another Ticker Tuesday for you all, where this week I am going to be diving in deep into the consumer discretionary sector. Well, what is the technical definition of the consumer discretionary sector? Well, it's goods and services that are considered non-essential by consumers, but desirable if you have the income. If you remember, a few weeks ago, I started a series in which I'm going to be breaking down the 11 sectors that make up the entire stock market. So this way I can go into more details of all the individual sectors, which stocks, which ETFs, what plays should you be looking at as you get your portfolio balanced and as you start investing your money and diversifying your investment. Most of your favorite companies that you probably love the most and actually probably shop at the most are more than likely included in the consumer discretionary sector. And as a result, this sector does really well in times of economic strength or an economic growth, right? Because when people have extra money or discretionary income, they use that money to spend on things they want, on things they like, right? If you have extra money come in, right? What are you gonna use that money on? Maybe a new shirt, maybe a new bag, maybe some new clothes. Those are all discretionary items. You don't need them, but you want them. So as a result, when you're making a lot of money or when the economy is strong, a lot of people spend money on things they don't necessarily need, or like Christmas time, we buy gifts for things of what people want, and as a result, the discretionary sector does very well. The discretionary sector is probably one of the best places to start your investing journey because you understand or you're familiar with a lot of the companies that are already involved. I just named about 10 companies that probably everybody in this country knows and probably all around the world knows. These are household names, these are brand names that are on every TV, every billboard, every commercial, every social media app. So as a result, the best way to get started learning how to invest is investing in things that you know and investing in things that you enjoy. The consumer discretionary sector gives you that ability. I could give you a ton of tips to be successful inside the sector, but the number one thing, the one strategy and tip that you should know, invest with the best. That's it. It's so simple. Why? Because with the discretionary sector, you know who the industry leader is, right? If I say Nike or Puma, which one are you gonna choose? Probably Nike, right? If I say Target or if I say Kmart, which one are you gonna choose? Probably Target. If I say Marriott or I say, what's another hotel chain? Super 8. What are you gonna choose? You're gonna choose Marriott. That's what it is. You want to spend your money on the best discretionary items, right? You don't want low quality hotel rooms. You don't want low quality cars or brands. So as a result, think about your investments the same exact way when it comes down to the discretionary stocks. You wanna invest in the best discretionary stocks. A few other strategies to look at when you're investing in this sector is consumer confidence and overall industry trends, okay? Consumer confidence is simply
consumer confidence
when I have in the overall economy. If you think that the economy right now is strong, if there's a lot of jobs out there, wages are increasing, there's a lot of, economic growth, you're more than likely gonna spend more money. You're gonna think that, the buddy next to you is gonna think that, your neighbor's gonna think that, the person down the road is gonna think that. If consumer confidence is high overall, this sector does very well because more people are spending their money on discretionary goods. But you also have to look at industry trends because there are a lot of sub-industries that make up the overall consumer discretionary sector, such as I mentioned before, the retail, industry, the automotive industry, right? The apparel industry, the entertainment industry. So here's one quick example. Right now, the automobile industry is really expensive because semiconductor chips, there's a shortage on them, right? We're getting caught up. The auto industry is getting caught up. But back last year, you probably saw that, and even recently, that there's been an increase in the used car prices. So that is something that tells you that it's a trend that's going on in the industry within the consumer discretionary sector, right? So as a result, if let's just say, for an example, cars are super expensive and people aren't buying cars, maybe right now might not be the best time for your automobile stocks to be making you the most money. But in Christmas time, a lot of people are doing what? Probably doing more shopping on clothes. So as a result, maybe a company such as Walmart is doing a lot better right now, or Amazon or Nike, because of the fact of Christmas. So as always, I'm going to give you 3 stocks that I really like that you can start looking at in the consumer discretionary sector. And then from there, you can start adding yours onto there. So let's get it going. The first one, Consumer Discretionary Select Spider ETF. You know I'm always going to put an ETF. The ticker is XLY. All right. And what this ETF does, it's comprised of all the great companies that I mentioned at the beginning of the video. They all are holdings within this ETF. So if you want to have Walmart, if you want to have Amazon, if you want to have Tesla, if you want to have Chipotle, if you want to have Marriott, and you don't want to own all of those individually, own this ETF and you literally get all of them. The reason why I also love this ETF is because Amazon and Tesla are both 20% of the overall ETF. Yes, that's a large percentage, but those are 2 great companies that are also forward looking into the future that can make you a ton of money still, even though they've made a lot of money in the past. They still have a lot of upside, a lot of potential, and they make up more than 40% or about 40% of this entire ETF. And then guess what the next 3 are? The next 3 largest holdings of this ETF: Home Depot, McDonald's, Nike. Though that's a golden top 5 right there. If I told you could own 5 stocks and I told you Amazon, Tesla, Home Depot, McDonald's, Nike, man, that's big time, all right? Over the past year, this ETF is up over 25%. So if you passively just put $1,000 into this thing, in the past year, you would have made $250 just for owning it. You can't beat that. You absolutely can't beat that. Right now, this thing is trading at about $195 a share, right? So it's a little bit more on the expensive end, but again, there's still a lot of upside. There's a lot of potential if you believe in the companies that comprise of this overall ETF. The next stock I like in this sector is VF Corp, ticker VFC. This company, I'm sure you might not know about this company, but once I start naming some of these brands that this overall company owns, I guarantee you're gonna know them. Right now, they're trading at $71 a share. They hit a 52-week high of about $90 and a 52-week low of about $60. So right now, they're trading a little bit towards the 52-week low side, but that's why I love them, because they're down about 16% over the past year, but they have a ton of upside for me. Why? Because back in December of 2020, they acquired the hypebeast brand Supreme for $2.1 million. You know Supreme, the hypebeast store, right? The red box logo tee that people want to stand in line for hours or that sells out in seconds. That brand alone can push this stock up. But when I tell you some of the other companies that they own, such as Vans, North Face, Timberland, Dickies, then you can start seeing where I'm going. Think about this company in a year from now, 2 years from now, when they have all of these brands collaborate with each other, when they get some more mergers, some more acquisitions. I mean, this thing right now has a lot of potential and a lot of upside. Management loves the way that they're molding these brands, and they're looking to get a larger digital presence. So think about Supreme. They have a big digital online presence, even though they only have a few flagship store locations. They have a big online presence. That is their mission and goal. They're trying to now focus on us as the consumers. Where we? Online. Think about even the metaverse. A company like Supreme, that's a golden hype company that can take advantage of some of the digital advances that are going on right now. And going into the future, I like this company directly aligned with some of where the future is headed, especially when it comes down to digital apparel, clothing online. So despite them being down over the past year, they actually had $1 billion in free cash flow in 2021. So I'm interested to see what happens next year. Again, they just had the Supreme acquisition for 1 year. So they're still working out all the kinks, developments, selling off some of their old assets, merging into these new assets and some of these collaborations. So I really like this company, VF Corp, to see what they can do and maybe get back to that $90 or even pushing into $100 range. The final stock that I love in this sector is Target, ticker TGT. Now, everybody knows Target. Target's been around forever. But the thing about Target that I love a lot is that they have been implementing some massive changes over the past several years, and now we're really starting to see this reflect in the stock price. Now, this stock is the most expensive out of all of those that I recommended, but this is a buy and hold play. So this is not a stock that might make you rich overnight, but I guarantee you this is one that can literally make you money over time, over the years, dividends, and as people continue to shop there, as they continue to do great things, you can get paid too. Right now they're trading at about $223 a share. They have about a 52-week high of about $270 and a 52-week low about $166. So with the recent pullback that's been going on in the markets, this stock has sold off, and I think now is a great time to get in on the action, okay? They're up over 30% in the last year alone, but this is the kicker. They're up over 200% in the last 5 years. Now that is what I talk about passive income. 5 years, 200%. Their CEO, Brian Cornell, in February 2017, he introduced this 3-year turnaround plan, and it's been amazing since then. His goal was to let go of some of their old private label names and start introducing some of the newer ones. And in that time, they've dumped a bunch, and they've actually added more than 30 new private labels in the last 5 years, all right? And guess what? 4 of those private labels have generated over $2 billion annually each. 4 of those, and there's several other ones that are generating over $1 billion annually. So guess what? Target's doing a lot of great things when it comes down to their internal line, into their internal product, and that's what I love to see. Their revenue's up over 13% in the past year. Their net income is up over 47% year over year. Those are what we're looking for when we're looking about for our long-term holdings. Companies that are continuing to change, continue to implement, but guess what? Their numbers are making sense as well. And guess what? For me, I like the fact that we as a millennial, Target appeals to us. I don't shop at Walmart personally. I'm not a big Walmart fan. So as a result, what's the next best thing up? Target. Like everybody loves Target. And guess what? They're investing heavily into their technology. They're trying to improve their app. They're trying to improve the customer experience, the curbside experience, and the convenience of shopping for us millennials. So they're appealing to literally the newer generation. So you Walmart, the old school, y'all got that. Target, us new people, we're in. And guess what? I think even though they're up a ton over the last few years, I still see a ton of room to grow as they continue to try to open new stores, refine some of their old processes, and get their private labels pushed out even more. And guess what? I love their new stuff. Their new stuff is stylish, it's fashionable, people are buying it, people are enjoying it, it's comfortable. Even their clothes, I was shopping there the other day and I was like, damn, their clothes are good. So guess what? That's what I'm looking for. When I'm inside of a store and I'm enjoying the experience, that's the type of company I'm trying to buy. There are so many other stocks that you can own when it comes down to the consumer discretionary sector. I will give you a warning. Don't put all your portfolio in this sector. I know it's tempting because these are names that you recognize and you probably are familiar with the most because you shop at the stores the most. But guess what? You can have it as one of your largest sector holdings, that's fine, but please keep in mind that there are other sectors out there that will make you money, especially in the long run, but this sector can definitely make you some bread, and especially during the Christmas time. So, and here's a quick tip about this sector as well. The Q4, the period that we're in right now, from October, November, December, a lot of these companies make all of their money, literally the majority of their money in these last 3 months because of the holiday season. So in the next quarter, in Q1, when we're looking at their earnings, that's a golden time to see which companies are trending upwards and which ones are trending downward. You're in the perfect opportunity now to start researching them and preparing to buy them. As always, I'd love to hear some of the consumer discretionary stocks that you're looking at, that you own, that you think are the next ones up, that's been making you some money, or even the ones that's been losing you some money. I'm interested to hear in all of your stock picks and all your stock trades. So drop a comment below, like this one, and I'll see you all next week. All right, thanks guys.